I have to deliver the goods.
Yeah. Okay. We've got a quick baby change.
I think what's hard about this is, okay, so one of the areas where it's sort of like best times ever is the SaaS market, which is where I invest in. And I'm obviously investing in very, very early stage companies, but we're seeing valuations now go to multiples of ARR that we've never seen before.
50, 75.
I would say 100 times. I'd say 100 times ARR is sort of the rule of thumb right now. And you're seeing
at what scale? A $5 million company is worth $500 million?
Anywhere from 1 million to 10 million. I mean, absolutely.
Is worth between $100 and $1 billion, which makes no sense.
Well, no, it does. Let me give you the argument for why it could make sense. Okay, let's say the company is expected to go 3.3x this year and 3x next year. That's basically a 10x over the next two years. So that 100x in 2 years will only be a 10 times ARR multiple. And by the way, if you look at the comps for the companies that have gone public, the SaaS companies that have gone public, like look at Toast being worth 30, 40 billion. So they're trading at 30, 40, 50, 60 times ARR in the public markets on big numbers. So
but David, how hard is it to go 3x? That is, going 3x is hard. Going 3x back to back, that's like winning two NBA championships or being in the finals. It's hard.
No, I don't think it's that hard. I mean, it's
not for you, but you're the king of SaaS. I'm being dead serious. For a SaaS founder with $1 million to go from 1 to 3 and then 3 to 9, how many out of 100 actually go from 1 to 9?
Yeah, I'll tell you, Yammer's trajectory, and this is over a decade old. We went from 1 million in our first full year selling the product to, back in those days, we looked at total contract value of 7 million of TCV. That was about 5 million of ARR. And then it tripled the year after that. So, and then we tripled the year after that.
Well, a category-defining SaaS company. So
and then we got acquired by Microsoft. But I'm just saying that it's entirely possible. There's a lot more Yammers today or companies with that growth trajectory. So, but look, this is what's led to, our fund too, which we started investing in 2019, which has a SaaS focus, already has 5 unicorns in it from companies that we invested in the seed or Series A.
That's crazy.
So, but look, when you're seeing like results that good, where my head goes is, okay, this is too good. What am I missing here? Or like, what's the downside? And how long will this sustain?
Well, just to build on your point, there are these businesses that have, I would say, interesting products that are growing well, but they may not actually be very important companies, yet they trade at enormous valuations. And then you have these companies that are just so superb, and I'm talking about Microsoft, Google, Apple, and Facebook, that now trade in many cases at some pretty deep discounts to their intrinsic value. But this is the sign of this histrionic behavior that I think embellishes the end of a bubble, right? It's this thing where you look at a growth rate and you don't even ask the structural questions about business quality, viability, sustainability, competitive moats. Team. You're like, oh, well, it's growing from 300%
total addressable market.
It's only decaying to 200%. I buy. Well, it's like, but what are you buying? And is there any longevity and staying power? This is why, I think there are some great businesses in SaaS, but I also think there's a lot of head fakes. And in the public markets, particularly, people just want to buy that growth, as David said, because they're chasing yield. They're not, do they really understand, am I buying this company because I really believe in this database technology versus that streaming technology versus this container technology? They don't know any of those things.
Well, so this is the conundrum is I actually do believe, I believe in my own portfolio and I'm doubling down on all these companies and I do believe in SaaS. And I think the reason why these SaaS companies get such great multiples is because they're pure software businesses, very high gross margins, 80% plus gross margins. Once the flywheel gets going, they're very hard to displace. They have, it's not just a recurring revenue subscription type business, but you get expansion out of your current customer base. So, on January 1st of a new year, you're starting with 120%, 150% of last year's revenue just from your existing customers. And then you're stacking the new revenue cohorts on top of that. So I am a believer in SaaS, but when I see everything going so well, it's SaaS and NASDAQ and S&P and crypto. And then I see, 125% debt to GDP and the sort of radical spending that's coming out of Washington. I just start getting nervous. And I don't know if I have like a prescription for people out there. I would just be a little bit cautious right now and temper your enthusiasm. But look, the flip side of it is we could keep having a boom for 5 more years, And so the market
what do you do?
Sit
it out while inflation is going through the roof?
You can't sit it out. But on I was listening to Vinny Lingham's show on Beep on Call In. It's called Crypto Musings.
There we go.
No, he and Sonny Madra do a great show. That
I think we all just got 25 bips.
You guys should all listen to his show. It's called Crypto Musings. They were talking about all the dog coins the other night. It was Shiba Inu and Dogecoin, and there's a couple of others. Vinny made a great point. He said, listen, if you're out there listening and you're sitting on life-changing money in Shiba Inu, sell. Take it off the table if you can. Keywords being if you can. So look, this boom could last for another 5 years. It could last for another 10 years, and the valuations could keep going up. The earnings could keep going. You don't want to miss out on that bull run. But if you've got life-changing money in a highly risky position that's not diversified, I'm amending my advice of let your winners ride to take some chips off the table prudently. Doesn't mean you sell everything, but just take some chips off the table.
To diversify specifically.
Diversify.